You might be feeling a bit overwhelmed thinking about the chaos of riots happening out there, especially when real people are losing their homes, safety, and hope. It's heavy stuff, right? But here's something most folks tend to overlook while the chaos unfolds. It's not just a tragedy, it's also a big shift in power, ownership, and opportunity. This isn't about taking advantage of anyone. It is about seeing how cities can bounce back and how wealth can be created even in tough times. Let's dive into Los Angeles. This city has some incredible secrets when it comes to real estate, and I'm here to peel back the layers for you. If you're curious about how the pros play the game, not just sitting on the sidelines, but getting in there yourself, this video is absolutely for you. We'll break it down into some juicy parts, but don't worry. I won't just hand it to you on a silver platter. We'll flow through the current state of things, check out some real-life examples, and I'll arm you with strategies that could put you years ahead of the game. Ready? Let's kick things off right at the heart of it all, Los Angeles. This city is a beautiful mess. On the surface, it's all Hollywood glitz and glam, but beneath that, there's a lot of heartbreak. You've got rising homelessness and tent cities popping up faster than new apartment complexes. It's a tough scene, with crime rates climbing in neighborhoods that used to feel safe and welcoming. People are packing up and leaving, and businesses are shutting their doors. But here's the kicker: despite all that, investment is quietly flowing into these very neighborhoods. Sounds a bit crazy, doesn't it? Why would savvy investors put their money into areas that seem to be falling apart? Because they're not buying what is, they're buying what could be. Real estate isn't just about the bricks and mortar, it's a game of vision. The biggest wins happen when everyone else is looking the other way. Take Koreatown, for instance. Just last year, in April 2023, a developer dropped a whopping $160 million to snatch up to aging hotels. But here's the twist: they're not planning to keep them, no. They're going to tear them down and build high-rise condos instead. Why? Because this developer sees something most people don't. Koreatown isn't on its last legs, it's just lying dormant. The city is investing in transportation, housing, and culture in that area. So, once the dust settles, this developer is going to own a piece of the skyline. And then there's this other project in the works. A developer is planning a 17-story luxury tower on the side of the old CBS Studio Center, right in the heart of LA's struggling tech corridor. Sure, the tech scene took a hit, but talent has a way of sticking around. Law still draws in visionaries and innovators. This developer isn't just thinking about today, they're playing the long game, looking 5 years down the road. When the tech scene rebounds, they'll be sitting pretty with the keys to the castle. Let's not forget about Limer Park. This area has been historically overlooked. It's rich in culture, but has seen little investment. Now, there's a mixed-use project underway that includes apartments, retail spaces, and community gathering spots. The mastermind behind this, Hanif Mohibi, he has been quietly scooping up South LA properties for years because he knows a secret: what looks risky to the crowd can turn into gold for those who are patient. So, what's next? Let's explore a few potential futures for LA. Scenario 1, the best-case scenario. The city keeps investing, neighborhoods bounce back, and LA transforms into a thriving metropolis again. Property values skyrocket, rents climb, and investors cash out ethically, having contributed to the city's turnaround. It's a win-win for everyone involved. Scenario 2, nothing changes. The city stays stuck, progress crawls along at a snail's pace. But here's the twist: even then, properties slowly appreciate because supply in LA is always tight. Investors who can hold on through the lull still come out ahead, just at a slower pace. Now, Scenario 3 is the worst-case scenario. We see another wave of riots, chaos erupts, and public order breaks down. Property values plummet, renters flee, and investors who jumped in too late or at too high a price take a massive hit. It's painful all around. But there's also a fourth, more complex path. The city tries to get everything right: public safety, infrastructure, incentives, but life happens. Maybe there's a natural disaster or an economic crisis that shakes things up. Even then, savvy investors can win by buying the dip and betting on the long haul. The city doesn't completely fall apart, but it doesn't fully heal either. And guess what? That's where the biggest margins are made. It's not about finding perfection, it's about making smart predictions. So, what's my take on all this? The best strategy is to look beyond the obvious hotspots. Anyone can do that. Instead, focus on the areas that feel uncomfortable, where there's noise, uncertainty, and hesitation. The trick is to position yourself in places that might seem undervalued today, but are bursting with future potential. Yes, that takes guts. You'll have to be okay with boarded-up storefronts and news headlines that send other buyers running for the hills. Fortune doesn't just favor the bold, it rewards those who take the time to study the patterns. Remember, the areas that are already struggling often have the least to lose and the most to gain. Investing isn't about being reckless, it's about being ready. It's about knowing the risks and still playing the game with your eyes wide open. Liz's story is still unfolding, and whether it's a tale of rebirth or relapse, those who prepare now will be the ones to write the next chapter. Now, let's talk about some practical steps you can take. First, do your homework. Dive deep into local news, community boards, and real estate reports. Get a feel for what's happening on the ground. Next, network with other investors and locals. They can provide insights that data alone might miss. Attend community meetings or events. You'll get a better sense of the vibe in different neighborhoods. Consider partnering with someone who knows the area well. They can guide you through the ins and outs and help you avoid common pitfalls. Also, think creatively about financing. Traditional loans aren't the only option. Look into grants or partnerships that can help you get your foot in the door. And don't forget about community involvement. When you invest in a neighborhood, get to know the people, support local businesses, and contribute to community projects. This not only builds goodwill, but can also give you a leg up in understanding the local market. Finally, stay flexible. The market can change quickly, and what seems like a good investment today might not be tomorrow. Keep your options open and be ready to pivot when necessary. Thanks for tuning in. If you found this breakdown valuable, hit that subscribe button, stay humble, stay smart, and I'll catch you in the next video.